Hello everyone, PS from PS Invest Plays here today. We're going to speak about why I'm buying Google stock and what is my price prediction for this stock by the end of 2021. 3 SPAC stocks that I'm buying that I think can give 2 or 3x profits in the next 2 to 3 months. Market volatility. How do you protect yourself? What you can do to maximize your profits? We're going to discuss all of that today. So stick around. I think you'll like what I have in store for you today. If you like this video, please don't forget to subscribe, hit the like button, and share this video with your friends and family. This helps me grow my YouTube channel and bring out this content to my YouTube family. With that said, let's get started. All right, Google stock, ticker GOOG. Now, the reasons why I'm recommending Google stock, why I'm buying, number one, ad revenue. I expect a major bump in the ad revenue for Google in Q4 2020. There was a small dip in Q1 2020, which is expected considering the pandemic, but Google has made a very good recovery and its ad business is doing extremely well. Number two is cloud. Google has been doing a good job catching up with its competitors such as Amazon AWS, Microsoft Azure, and is working extremely hard to be the market leader in this space. It has captured considerable market share compared to Microsoft Azure, which is the second biggest player in the marketplace. Number three, autonomous driving. I believe Google is in advanced stages of delivering autonomous driving, has been making advances behind the curtain, and I expect some big announcement coming out by the end of 2021. Hardware and accessories, Google phones, Google Nest, security systems. Google has been making some good advances and is catching up with the competition. In fact, the camera system of Google phones is considered better than Apple and Samsung in low light resolution. An audience is appreciating those and are buying their products more now. Social media platform. YouTube is one of the best social media platforms. Their video calling platform, I don't remember what it is called, has seen very low adoption, but I expect some major improvements in 2021 so that they can catch up with Zoom. Google stock price has been trading sideways for a couple of months now, and I expect that trend to continue until the earnings announcement, which I think is expected either end of January or early February. I think this is the best time to buy this stock. Now, I know this is an expensive stock, but you can definitely buy partial shares on various platforms such as Fidelity or Robinhood, and I think Webull also offers that, but I'm not 100% sure on that. Now, in terms of earnings, Google has been giving consistent earnings growth in 2020. There was a small blip in Q1 of 2020, which is expected due to the pandemic. But since then, it has recovered very well in Q2 2020 and beaten expectations in Q3 2020. And I expect that trend to continue in Q4 2020 and in 2021. The analyst predictions for 2020 and 2021, I think, are on a lower side. Instead of 6% earnings growth in 2020, I expect Google to give 13% earnings growth. And similarly for 2021, I expect Google to give 25% earnings growth compared to 18% that is predicted by the analysts. Now let's move on to the 3 months Google chart. Now, as you can see in the chart, I have drawn these red lines which show it has been range bound between 1850 and 1690. And I think that this is the right time to buy, and the earnings would be the biggest catalyst to take the Google stock price up. I expect by the end of 2021, Google's stock price to be around $2,350, which is approximately a 35% upside potential. I'm definitely buying this stock, and my strategy is exactly what I have said now. And even if the price goes up, I'm a long-term investor in Google. I believe in this company, and I will continue to keep adding on a monthly basis or whenever there are dips. All right, moving on to the 3 SPAC stocks that I'm buying that I think are going to explode in the next 2 to 3 months and can give 2x or 3x profits. Now, before we dive into those three SPAC stocks, there are a few pointers that I always remember when investing in SPAC stocks. Number one, SPAC stocks are short-term plays no matter what anyone says. Invest only if the price is between $10 to $20, preferably below $15. Now, I cannot emphasize more on this, preferably below $15. Many a times people make a mistake of buying into the SPAC stocks because everyone is buying and get into the FOMO, fear of missing out, end up buying it too expensive. When the SPAC stock pulls back and drops below $15, they regret making those decisions. So my recommendation, let the cool off happen. Generally, when the merger announcement happens, there is a sharp rally in a SPAC stock. Let that rally happen. Let the stock pull back, preferably below $15, and then buy. As the merger date comes closer, that is the time when the real appreciation in the stock price happens. With SPAC stocks, always expect volatility. The faster these things go up, they also come down really fast. And sometimes you would see that there is no news, and because of which there would be no price movement. And that's okay. As I said earlier, always plan your exit. Set a target for yourself. For example, you set a target that it's going to 2x, then exit at that point. Do not be greedy, exit at that point. Buy when the price cools off. Do not chase. Sixth point is do not regret early exit. Now, I try to focus on SPAC stocks that are in the industry where there is market momentum. For example, currently there is market momentum in clean energy, EV, technology, ride sharing, and genomics. With that said, now let's take a look at the three SPAC stocks that I'm buying. The first one on the list is Lefteris Acquisition Corp, ticker LFTR. This SPAC is merging with a fintech company. There is no merger company announcement, meaning they have not announced which company they're going to merge with. Now, the reason why I got interested in this SPAC is because the management team on this SPAC has a history with E-Trade, Coinbase, and TD Ameritrade. That gives me confidence that the next selection that they make could be a big one. Next one on the list is Falcon Capital Acquisition Corp, ticker FCAC. Again, there is no merger company announced for this SPAC, but this SPAC is focusing on potential gaming or gambling companies. The founding investor for this SPAC launched Skills and DraftKings. So that is one of the reasons why I'm interested in this SPAC and I have invested in this SPAC. And the last and the third one for today is Burgundy Technology Acquisition Corp, ticker BTAQ. This SPAC is merging with ReAuto, an electric vehicle manufacturer. Again, there is no merger date. So these are the three SPACs that I'm buying today. All right, let's talk about market volatility. And how do you protect yourself and what should you do? The markets are going up one day, down one day, or there are pullbacks, or there is a correction. How do you protect yourself? Now, the way I see market volatility or market pullbacks or corrections, I consider them as Black Friday sales. And how do I prepare myself? I tend to keep 15 to 20% of my portfolio in cash. Now, when there is a Black Friday in the market, I go on a shopping spree in the stocks that I believe in. And the stocks that I believe in, I've been talking about them on my channel. Those stocks are NEO, Tesla, NVIDIA, Apple, Amazon, and Google. The three SPAC stocks that we spoke today, I consider them as short-term plays. And even if there is a market pullback, there is great momentum with these SPACs or in the industries that these SPAC stocks are planning to announce their mergers. So I don't see a big correction, or even if there is a correction, I expect a V-shaped recovery wherein you would get your money and your profits in a very short period of time. The way I invest in the stock market is always do your research. Think as if you are investing in a stock for a long time. Now, you don't have to invest in that stock for a very long time. But if you go with a mindset, it's a mindset change. If you go with a mindset that you are investing in a stock for a long term, if there are market drops or if there are market crashes, you would not be worried. You know you have done your due diligence. You know that this company is strong, has good balance sheet. So you would not be compelled to sell a stock at a loss, and you would have the confidence to wait out the decline and come out the other side of the market correction with profits. Well, that's my playbook. What do you think? I would like to hear from you, and if you can share your feedback, I would appreciate that. I expect the stock market to end the year at 4,500 to 4,600. I do not expect a major correction, what we saw last year in 2020. Yes, there will be pullbacks. In my next video, I'm going to talk about 3 EV stocks in China that have been under the radar and Wall Street has been sleeping on them, where I think you can make really good profits. Well, that's it for today. If you like this video, please don't forget to subscribe, hit the like button, and share this video with your friends and family. This helps me grow the channel and bring out this content on a regular basis to my YouTube family. Thank you for watching. Bye-bye.